crypto collateralized loans have been a thing for a number of years now, with even NFTs getting into the mix during the last bull market. Generally speaking, that didn't end well. NFTs aren't particularly liquid, and that can cause problems when markets as a whole swoon, forcing painful liquidations and quite bad prices when that sort of thing goes down. But international exchange giant Binance apparently is convinced that there is something here, with a new NFT loan feature launching tomorrow that hopefully won't come to be seen in hindsight as a hold my beer moment. The company is offering loans in exchange for Yuga Lab type properties, including the Bored Apes, as well as Azuki and the Doodles collection. That makes sense to the extent that any of this does to me, and the company says that they're offering this feature to allow collectors to allow them to, quote, participate in the market without having to let go of their precious NFTs, end quote. At least that is the hope. Zach, am I too negative about this? I feel like I have nothing positive to say about this except that y'all going to lose a bunch of money at some point in the future, and you're going to be really, really unhappy about this choice.
My precious. I think you are being slightly negative, sir, right? People want liquidity from their various crypto assets, right? They want to be able to use the thing without necessarily being able to part with the thing. And to my mind, that's really like the major innovation of DeFi, right? You can use your crypto without having to sell it. So the idea that this would be extended to the world of NFTs, I think is certainly something that makes sense. I think it's interesting that we're seeing Binance do this, right? Typically these features, this NFT-fi, right? The intersection of DeFi and NFT has existed on chain, right? Through various protocols that are typically on the Ethereum blockchain. So the fact that Binance is a centralized finance player, a major one at that, is rolling out this feature, I think is quite notable, quite interesting. Would be curious to see if there's a lot of uptake here as it relates to usage, right? A lot of these NFT collections are pretty much down bad in value. So I'm wondering if this is something that is specifically a bear market product as people look to get whatever they can from these assets when put up as loan collateral rather than trying to liquidate them on the open market. So maybe this is a nice bear market play, and I think there could be some upside here, but it's certainly not without risk for sure. Jen, I'll toss it to you.
I have some numbers for you that might answer some of your questions. So DappRadar recently released our report on Blend, which is an NFT lending platform released by Blur, which is an NFT-fi marketplace. And they accumulated 169,000 ETH, or $308 million in trading volume in the first 22 days, and compared that with trading volume across all NFT lending platforms, which is 375 million. So possibly Binance is just looking at the trends, looking at what's going on in the market, where the money is going right now, and making a play, making a bet for the next bull cycle. So I'd be curious to see more of those numbers, but that's recent data out of DappRadar. Zach?
Yeah, I love that you brought up Blur. I think just stepping back a few steps, like Blur and the sort of the professionalization of the NFT trading world, I think is something that very much animates decisions such as these, right? Like OpenSea was the retail conversation, it was the top dog, and then all of a sudden Blur came out and sort of catered to a more professional style NFT trader, and all of a sudden they're the top dog, right? So I think that may be animating some of these other decisions to roll out more sophisticated products relating to NFTs as an asset class, and I think Binance may be trying to ride that wave a little bit, as introduced by Blur's emergence on the market, and it's like it taking over the top spot from OpenSea in a relatively short order. So maybe that's sort of the subcontext of what's going on. Again, speculation on my part, but I'm glad you brought up Blur. Jen, I'll toss it down to Will for his thoughts.
Yeah, I want to go back to what Adam was saying, that the speculation on this, or how you feel about it. Because when I first read this, I was like, oh, great. Like, do we really need something like this? But then I was thinking about it. I was like, Binance isn't going to launch something where they're not going to make money and where there's not going to be a stability. And they will wind it down if they don't think it's going to last. Like, they've done that many, many times. They've created as many markets as they have wound them down. So I think that's one part of it. And then also with a lot of these things, it's under collateralized. So they're not going to let you take out more than the value of the NFT, and that value is going to be like 30% or 50%. It's similar to the Coinbase offering from like 2 years ago, where they allowed you to take a 30% loan based on the Bitcoin that you had at Coinbase. And so it's much like the mark to market, as you say, is relatively lower than like the asset value. So it's going to be different when they roll this out, and I think it will probably be okay. Though, for what it's worth, I have been waiting for a lot of these NFTs to go to zero, and then you'd be in a different situation, right? So who knows?
So final thoughts from me. So again, as far as Binance is concerned, this is a no-lose situation. There's no situation in which they lose here. Again, they either win because they make fees off the thing. They win because they provide more liquidity, which then allows people to purchase more, and do more trading on their platform, which is what they want to incentivize anyways. The challenge comes when, again, like, how many people over the course of the bull market or over the course of the last number of years have, taken out large loans against very much more liquid crypto than this, and then found that when times get tough, they get tough all around. And those times all around then make it so that they wind up getting liquidated in ways that are very painful. I know a ton of people who this has happened to. That is so much more true in the world of, in the world of NFTs than it is here. But this is a story for another day.